Okay, so everybody knows about this $330 million sword. Okay, that's great. What's interesting is the actual structure isn't that bearish. Like for the short term, I'm talking about, right? So if we do get a gap down or a flat open to sell, I want to be paying attention to possibly getting some out of the money week out puts, or sorry, calls for a squeeze. Okay, so let's talk about the market for a second. The market is set up really interesting, actually. Um, so I'm not changing my stance. I do think we get short-term support this week, possibly a nice fat squeeze up because there's not enough liquidity in the markets right now. And for us to sell down more, we need an injection of liquidity. So if we can get a squeeze up, that's going to be fresh liquidity for us to dump even more. Okay. And we all know that the after OPEX this week, this Friday, all these option flows are going to roll off, right? So when that happens, there's not much support for the markets because we know that call buying and all that good stuff have to come in to support the market. That's gamma, right? That's all this hedging and all this good stuff, right? But the market isn't run by the Fed right now. Okay, last year it was. This year it's not. It's geopolitically ran, right? You have to understand this. This is a big deal. So if the markets are geopolitically ran, then any short-term bullish news could create a nasty fucking squeeze to the upside, injection liquidity, then sell the fucking news, drill it back down, right? That's what I want to entertain that idea this week. I want to see us fucking drill or open red in the markets. And I want to see this thing set up for a nasty fucking squeeze. I want to see this thing hit up into this 57.31 zone, 57.35, and then if they UTAT it off that so this would be accumulation, a break of range, SOSBULPS, break, shoots up, and then it goes into a distribution cycle. Then either A, they're going to distribute it as a D2, which means no blow off of the top of the range. It would look more like this. For those people that understand the Wyckoff, it would redistribute down here and then go down, right? So if they do break range, which would be ideal, then they could hit my golden pocket zone, which is right there, about 57.60-ish to 57.75. So if they did something like this through FOMC or on the day of FOMC to get everyone bullish, just like this fucking day here. Let me just show you. I'm going to go to another strategy. It's called pattern recognition. Okay. Pattern recognition is a very, very useful strategy if you have a good memory. All right, so let's go over here. Where the fuck are we? November. Where are we? All right, you sneaky fuckers. All right, here we go. Okay, so let's take a look at this day. Let me get my EMAs out of here. Okay, actually, no, we'll talk about this. Okay, so, all right, this day here, yeah. So what happened here? Check this out. This is crazy. I'll never forget this day. It was so fun. So, FOMC, the day FOMC was right here. This is the open. Okay. But look at this. It was choppy. They dropped it into the FOMC, then they gapped it up heavy and then squeezed it up. Made everyone bullish, right? Look at this. Fucking drill. And then that was the top. This was FOMC, right? And watch this. This is what's cool about this particular setup. So this red line was FOMC day. They ripped it. And then if you notice, so this, I don't know if you can see it on the one. Yeah, well, it doesn't matter. The 4 hour shows it too. But up here in the RSI, this, I caught this short actually, and it was fucking dirty. So yeah, I caught a massive fucking move. I saw this right here. That was my cue. I saw bearish divergence on the 4 hour, right? So you can see price made a high, a new high right there, and RSI made a lower high right there, right there. And there's actually data on this fucking candle that shot it up, broke range, and there was a rising wedge on the 1 hour. I'm not gonna pull up the rising wedge. Literally, it's just it's gonna fuck my chart up right now. So, but I don't want to talk about that. So, point is this: when you get a huge event, right, and you understand that the flows are going to roll off after this week, and that things are run geopolitically, right? They could make the market look really fucking bullish this week, right? And if they do, and they set it up where we notice there's 1 to 4 hour nasty bearish divergence on an overextension on FOMC, we're taking that fucker short. All of us going, we're going to take it short. Okay. Because I think there's a high probability something like this sets up this week. So whether we go up or down, I really don't care. But I'm going to be really, really acutely aware of this type of a pattern setting up. Because remember what happened this day? This had nothing to, this was like, what was it? It was interest rates started shooting up. There was like some bullshit fear that was actually caused this. They blamed the sell off on. I forget what it was. Um, the 10-year dropped really aggressively. It bottomed, and that caused this multi-day sell-off of 500 points in some day or whatever day it was. And then you have this nasty move down into support, and the fucker just ripped. That's what I'm looking for. I'm looking for this setup, okay, to happen. I really like, so, being patient and, yeah, it could be recession fears, it could be a lot of different things, right? Most likely, you know, uh, we could most likely, it could be, okay, the Fed is bullish. Jerome Powell comes out and he starts talking really good, and the market starts to shoot up. And then all of a sudden, they close the market up, and they maybe sell it off a little bit, or maybe they close it up for the week. That's like perfect timing for them to just drop geopolitical news left and right into the 2nd of April, right? So we have a quarterly OPEX too, right? So we have the quarterly OPEX, right? And then, hold on a second here. Oh shit. I got somebody actually coming to my door soon. But it's right. I'll just hop off for like 2 minutes. I'm getting all right. I gotta get more diapers. I ordered more diapers. Um, yeah. So, all right. So let me just keep going and then when he comes, I'll just pop off for a minute. All right, so it's the geopolitical lures. So basically what we're saying is that like if they pull in fresh liquidity, squeeze it up, it's probably most likely only to dump it post OPEX. Oh, the guy's here. I'll be right back. Just give me 2 minutes. Okay, hold on a second. All right, just got a notification actually that one of the Chinese stocks is up a shit ton. Okay, all right. So the market is. I'm expecting that. So I'm expecting geopolitical geopolitical fears to drive the market back down. Similar to this sell. This was not Fed driven. The Fed ran it up on bullish news, and then they just rinsed it. So that's my thesis for this week. I think this whole Bitcoin short guy is, I think it's going to keep people away. So we'll keep an eye on it. If it sets up based on levels and structure and how like coming into the open, let me pull this up. So what's interesting about this is typically what we'll see. I mean, I'm not looking for a nasty move, but what I am looking for, I'm not muted, am I? You guys can hear me?
Yeah, you're good. Yeah.
Okay, cool. So I'm not looking for like a nasty move up. I'm just looking for like a retest of 70,000 or sorry, 87,000 to 88,000, right into the 4-hour 200 zone to this upper zone. And then, I mean, if that's a nice move and we can catch, Coinbase ripping, 12 bucks or MSTR ripping, like that'd be a nice little trade, something I'm interested in. Uh, And then what also is interesting is how some of these things are setting up. I posted some charts in my channel. These are all setting up to give really nice moves. Snow is in a position to squeeze. And I think, what is it? My trigger would be, so I just want to take this chart, draw a couple trend lines. They're not going to hit that one, but I don't know if they'll hit this one Monday. Yeah, they could. So I would like to see them come down to 153 and then take some weekly calls on this too and get it for a move up. This stock moves a lot on FOMC weeks. Like this is one of the FOMC week darlings. These things can move and the chain structure really bullish. You can see that the hourly 200 has gone through this really nice my EMA breakout swing strategy. How it had a big downtrend, puts in the SC, which is selling climax, right? And then you have a big rejection here. EMAs are still in a downtrend, right? And then it has another big rejection there and a big rejection there, right? And then in this whole time, the EMAs have flattened and they're now in an uptrend, right? So this is a bullish setup for me, right? This is something that I think will hit. I think this thing will see 165 to even up to 167. That's the zone I'm targeting. So ideally, I want to get into this around 153 on a morning flush and then set up where we're maybe the 160 calls, right? Or even the 157 and a halves, whatever it may be. Set it up where we can wait and let these go in the money, right? So that's of high interest to me. Coinbase, let's take a quick look at Coin. It's in a similar setup. This chart's a little wonky, but Amazon is actually a dirty setup. This thing's good, looking really good for a nice pop. Look at the volume down here. Ever since this big sell, it's just been, this is very bullish. This is very good volume, really good volume on the daily. They're consolidating it. And to me, it looks like they're ready to push it up. Where would we go? My targets would be, I think it's 204. I think it was this supply zone roughly. Yeah, 203 to up to the 21 on the daily. So like up to maximum 208. I wouldn't expect much more. And then we look at the 1 hour. It's in a similar setup as snow. You can see how EMAs were in a nasty downtrend. Okay. The daily volume supported. Now, oops. Now you can see that the EMAs had a, which is what I look for is multiple big rejections on the hourly as the EMAs are rounding up. So we get one downtrend right here, big rejection, big rejection, big rejection. That's what I love. And typically what I like to see is big overextensions late in the cycle on the hourly at a base after a long sell downtrend, where is a big overextension here, and it doesn't make or doesn't and it always reclaims with watch this. Let me go like this. Where if this is the low on the 13, it never breaks that low. The overextension shoots down, quick reclaim, buyers drive it back up, and the uptrend is maintained on the hourly EMAs right there. This is the epitome of compression, and it is literally what happens when negative gamma starts to neutralize, comes out, positive gamma starts to flow in because there's more call speculation. Buyers are stepping in and buying shares because they're finding some value here, right, in the short term and looking to buy. So you can see this thing shoot up, probably going to get stuffed first try at the 200 on the hourly. That would be a good target. So this is one of my top stocks to watch for a big breakout. I mean, not big, I wouldn't say that, but really, I mean, we catch a nice move on weeklies to 202, 203. That's a nice move. That's $5-6. Apple in a similar situation here. It's not quite ready for the kind of breakout I would trade weeklies on personally, but they do need to move Apple. You can see Microsoft's already broken out of the accumulation low. Let's see what they want to do if they want to come down to, you know, this 385 level, retest the zone, build some structure. It would look something like this. The breakout comes down, does a little flag, and then rips and gives it one of those. That would provide enough movement in the markets to create a squeeze up to 57.35, right? And the Apple could still kind of do its thing. We have longer dated Apple swings because the skew is fucking bullish as hell for June. So that means, like, to me, I'm looking at Apple on the daily and I'm thinking, okay, this could pop probably up to 219-ish. If it is, we'll take a look at where we're at in these swings. And maybe what we'll do is we'll keep layering in all the way in through early April into these June swings, because even if they pop it back down, wicket under, we can add to it, and they'll probably start to reaccumulate off this 200 level is what I'm guessing. Let me see here. Where's the other one that I was liking? Okay, so NVIDIA has an event coming up. I forget the date actually. I think it's Monday actually. So this thing's up almost 25% from lows. NVIDIA being up that much, what does that mean, guys? That means it's going to get priced in, right? And if you look at the structure of NVIDIA on the week or on this daily, all that's happening, in my opinion, is this. It's going to retest the zone right here. Maybe it shoots up max, like maybe up to 129 to 130. I've been looking to take some shorts on NVIDIA off this level. That's a really nice setup. We'll see how it sets up. If we can get some really good risk off on it, maybe right on that 29 to 130 level, and then take that thing back down. But this thing's going to get priced in. So That's something that I'm watching as well. AMD looks really good down here. Fuck. Oh shit. All right. AMD. Let's pull up the hourly. Okay. So this thing's looking pretty good. I won't trade it until it breaks. I would say, you know what? I won't say that. It depends on where AMD comes down into and how NVIDIA holds up. Because this thing, this if NVIDIA starts to push another, $8, $9 into that 130 zone, there's no reason why AMD can't see 103 to even as high as 106 to 105.73. Like this is a possibility too. It's actually pretty good value. Um, so now with all this context, one thing I do want to talk about is, you know, my buddy at the fund. You're very open about, that I communicate with him. This is, just to tap into that again and talk briefly about it. I mean, this is the top performing hedge fund in the entire United States out of the top 8 hedge funds. That's including JP Morgan and all these other big boys. They manage well over 7 billion and the guy has barely missed a fucking beat. We called top on swings by 7 to what was it, Nismo? Is Nismo on here? No, he's not on here. But it was literally
$7.
it was $7. Yeah, we got top on all those massive put swings. One of our members is up over 150,000 and still holding on those put swings. So actually a couple members are, but here nor there. The point is they're not buying you guys here. Think about that. Everybody's so fucking bullish in the top performing hedge fund. Who these people, these guys, used to work in the White House, right? The guy who was the CEO of this particular hedge fund talks with Jamie Dimon and a few of the other big boys every single week. So if they're not buying here, they're probably waiting for a little better price or better timing for their entries, whatever it is. So, long story short, this company is going to be launching a new fund, right? And whenever you think about it, when you launch a new fund and you're going to put over 100 million of your own personal money into it for your children, you're not going to want to miss the bottom, right? You're going to want to nail that fucker on the day, not on the week, not on the fucking day. Okay, so I could be wrong, he could be wrong, but we're looking at the bottom as April 2nd. Okay, so it fits into my squeeze thesis for the week. Get some fresh liquidity into the markets and then fucking drill the bitch down. I want to see a vol event. I've been saying this for a while. I want to see a volatility event based on geopolitical fear and possible recession bullshit hit the markets after OPEX. The market can move down really, really fast. If we take a look at the daily here, let's go back to the vol event back in August, in July. 1, 2, 3 days, you guys, and the market was down 500 points. 3 fucking days. Do you understand what $500 does in a trade like that? You catch a fucker like that. Think about that. Okay, it's really important to understand. We get a vol event now. 5,450. One of our gentlemen is a great trader. He's one of the probably one of the top swing traders that I've met. Hawk Holdings. He is expecting 5,450 to be bottom. He's got some pretty solid context too. That could be it. I really don't know. But I will say this. I'm not trying to swing long term until April 2nd. And on April 2nd, if we get a bottom in a vol event into that day, everybody in here is going to make a lot of fucking money. But I will say this, put the blinders on. If this happens on that day, put the blinders on and focus on the room. Focus on your entry and stay calm, really calm, because there's gonna be a lot of shit hitting the fan. Media is gonna be, fucking doomsday. Fucking Twitter's gonna be an uproar. It's gonna be hell. It's gonna be crazy. So just focus on what pays. Focus on the room. Keep your energy calm and be ready. And you should be telling yourself in this moment, hey, we knew this was coming. We're ready. This is not a surprise. I'm ready for this moment. I'm not going to sell until sells or somebody says, get the fuck out. All right. Because on this particular day, if there's a couple scenarios that could play out, and I'm going to go over this a few times over the next 2 to 3 weeks because I need to prepare you guys to enter something like this. This is not a normal situation. This is not at all. It's a very unique opportunity that happens very, very rarely in the markets. I've traded a few bottoms and they're fucking unreal if you nail it and if you have the diamond ball sack or diamond boobs for the women to be able to trade it. Okay. And this is why I really, really, really want you guys to understand why you're holding. It's not about, oh, I'm holding, oh, I'm holding, oh, I'm up, oh, I put 1,000 in and I'm up 5, 10 grand. You understand why you're holding. Okay. Because when you get a volatility event, over leveraged shorts have to close those fuckers out. And they're going to. Guys that have been short since 6,000 and guys that have been short since 5,900 for over a year or for the last 8, 9 months, whatever, like they're going to be closing these big fucking hedges out and they're going to be buying. But the bottom doesn't just act like you would think. And that's what I want to talk about. Okay. When this happens, the number one scenario I'm looking for is this. And I have a bunch of scenarios in my brain that I'm waiting for to set up. So I'll be ready for them. So this was a bottom in October. And this is a beautiful day because we gapped down. This was the day right here, right there. So this opened up at 55, or sorry, closed at 55.75. The next day there was a vol event based on, I think it was war that day. I can't remember. They gapped it down, right? And they gapped it down to what? Let's just call it 3,500, right? And what happens at a bottom like this, and I remember this like yesterday, it gaps down, and then what happens, it chops, and then it squeezes up a little bit, and it comes back down, and it slams down underneath the low, and then once it reclaims, that's when you go long. Once it reclaims the morning open and call it consolidation, you long it, right? And then you wait, and then once it breaks the range, it happens really slow, and it catches everyone off guard. Like everyone, all the bottoms I've ever traded, like on the fucking bottom of a big fucking move here. Whoops. Meaning like this, like when I talk about big move, I mean like this move was a 180 point day. That doesn't happen very often. Okay. You trade in zeros, you're looking at turning, $400 or $500 into like 12 grand. So when we do this, you have to understand it's going to go like this. It's going to gap down, chop at the open, pop up, trap people going long early, come down, set a spring, go underneath the range here, come back up, retest, and then we go long, and then it's going to set up, and then as soon as it breaks this fucking range, you're going to see hell break loose. That's exactly what happened here. And then actually on this particular day, there's a hedge fund that blew up like right here because they were over leveraged short, and the NQ skipped 50 points in like a minute. It was insane. We were all going nuts. So I want to also talk about this. This is why, when you get into a trade, this is how you don't, this is when you know you're in the bottom or there's a big situation, you're prepared for it. This is why you don't sell. I'm going to show you something really slick here. Let me do this. Okay. Blue. Okay. All right. There's that. That's the reversion, right? The Tingleberry. And then we got the low is right here. Just call it 5,500, whatever, or 3,500. There. All right. And then we have on the top side, here's the 21. Right there. Let's lower this a little bit right there. And then we got another one. Right, and then the top part. Watch this. Okay. So now I'm going to take a line and I'm going to draw this line from the 13 all the way down to the bottom. Okay. It doesn't have to be exact. It doesn't really fucking matter. But the point is watch this. That's the expected move of the reversion on a snapback in an aggressive market. Look where it topped, almost within the penny. See that? So if you know, because look, at the end of the day, like it's just simple physics. For every, for every reaction, there's an equal and opposite reaction. Like that's just facts, right? So what's really happening in this situation is negative gamma is at its peak, and then all of a sudden buyers start to step in, and then there's a lot of underlying derivative dynamics that start happening, like market makers got a hedge and blah, 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 blah. And then the negative gamma starts to get squeezed and it creates a whole lot of upward pressure. And then shares get bought and then positive call speculation just fucking goes 3 to 4x or more. In this situation, probably 5 to 7x, which we've talked about multiple times, is that's what you need to create an aggressive squeeze and charm to kick in later in the day, which pushes everything up, right? And then boom, voila, there's your massive fucking move. And you already knew it was coming because you understand the Tingleberry, right? So this type of situation, when we get in the moment, if this happens for us and we make a move, say 3,500, we're in, 3,510, we're in, whatever. And we're in there, we're ripping. It's not just going to go fucking straight up. It's going to go like this. And then it's going to drop and then it's going to fucking rip, right? Like that. That's what it will look like. And this move right here, this hook and flag, you better not fucking sell because that next fucking move up is literally going to explode your contracts. Because think about it. If you get in here at 3,500, 3,510, whatever, and let's say we're in the 3,600 calls, 0 DTE, or we're in the 3,700 calls for 1 DT, or we're in both and we're stacked, like fucking loaded, right? What's happening? As you move to the first level of the reversion, right? That's an 80, 70, 80 point move. That's a decent return, right? I mean, fuck, we hit 70 points on SPX literally almost every fucking day in the last 4 weeks, it seems like, on SPX. But this is a special day, and we know that. So when this sets up for us, and those things are not in the money here, right? Here's the thing. It's going to go up to this level, and it's going to test your fortitude, and it's going to wick down, and then it's going to drive up. And when it drives up and through that 21, then we're going to trim. Because at that point, your deltas are going to explode. Because if you have the 3,600 calls and that's right here, and you shoot up and through it early in the day, like by 10, maybe like by noon or earlier, those deltas are going to absolutely juice so damn hard. And you're going to take trims, not sell all. And then we're going to move our stops up to like probably 300-400%, right? And then we're going to let those babies cash settle. Okay. That's how I want to, or not, maybe not cash settle. I mean, what happened on this day? Yeah. I mean, it could get to the point where it's like, okay, equal highs on the wick. or push up a little higher. If you got one DTE, we'll figure that out, right? But at the end of the day, we catch 150 point move on one DTE or zero DTE. It's gonna be a massive day for everybody in the room, and that's what this is all about. All right, creating a lot more happiness and a greater financial success for everyone here. So don't worry when the time comes, just make sure you're well aware and ready to go. And don't be fucking around with Twitter and all that shit. I'm telling you, just focus on the room because what we're gonna do on this bottom is not only just zeros. Yeah, I know. So we're not just gonna do zeros. We're gonna do zeros, one DTE, 2 week DTE, way the fuck out of the money. And then we're also going to do like June calls and stagger this shit right out across the board. All right. Any questions on that? All right. So let me see here. All right, we talked about how the Fed's full of shit and they're manipulated by the government. We talked about the possibility of a vol squeeze. If they do some possible geopolitical surprise earlier in the week to create some, manipulation, more liquidity in the markets. Then we talked about how the flows are going to run off after the week, and that will should underpin and create more downside pressure. All right, what else? What was that thing that Clay was asking? Clay, where are you at here? I'm looking up here. Oh, levels and entries. Okay, let's talk about this. All right. So I've gotten a couple questions about how to play a pivot. Okay. Anybody want to hop in here? How to read your daily key levels and pivot. Yeah. Okay. All right. We're going to go over that right now. All right. So let's take a look at last Friday. All right. Okay. So last Friday, how I want you to look at my write-ups is this. All right. So we use, in this room, we use US 500 because it's futures. And sometimes we'll do futures alerts, right? A lot of people in here trade SPX and they have interactive broker accounts where you can trade SPX damn near 24/7. And also it gives more data. Like, so, we also have a ES futures guy in down there in the futures channel with what's his name, John. John's a great trader. He's very busy. He's a teacher too, so he's got his hands full. RS is a futures trader, really good system. So for those that are new, check him out. He does EDU. He had a fucking awesome EDU this week. And so they post ES levels as well as US 500 levels. So there's a little bit of a mixture with levels. But for me, I post US 500 levels, and then I also post SPX because when I don't like to use coding because I'm not a mathematician. I do use a lot of math, but I don't like that quant bullshit word. So when I'm building out my pivots or my momentum flips, right? Because I build those out based on gamma, structure, chain, all this shit. A lot of different things go into it. And Vana. And when I do that, those levels are based on SPX. Okay. And it's important to understand that SPX, when the volatility is kicking, meaning the VIX is up or elevated, that there's a disparity in price. So US 500 could be at 56.10, but SPX could be at 56.13, right? So it's important to be able to understand where you're at in space. Like, so a lot of times what I do is, when I mark my levels, I'll look in the morning as the open is happening. I'll say, okay, well, SPX is at 56.13, but US 500 is at 56.10, and 56.10 on SPX is my pivot. Okay, well, as it comes down, then I start to mark my level on US 500 or SPX, right? So either one doesn't matter what work. But the point is remember all the pivots, and I say this, it's SPX. The pivots are SPX. Okay. They're always within a 2 to 3 point range of US 500. How do we trade them? Okay. So let's take a look at Friday. Friday was, what did I say? I go 56.05 to 56.04 is the upside momentum flip, and 56 above 56.32 volatility, vol will crush, providing support. The downside flip, I've left the P out, flip is 55.61 and 55.72 point, or sorry. Oh yeah, that was a total typo. Jesus. 45. The flip was 55.72, and that was a massive spot. So let's go back here. My bad on the typo. Jesus. It didn't really matter. It was supposed to be 55.61, not 45.61, but you guys could probably figure that out. So let's take a look here. Okay, this was Friday. It was a tough open to read because they gapped it up. Always when you have a massive gap up and a massive gap down. Later, brother. Have a good night.
Catch you, homie. Catch you guys.
So whenever we have a massive gap up or a gap down, very challenging to trade that open. However, let's take a look at this. Okay, so we could see here that, when I say, okay, 55.61 was a pivot. That's this level, right? Oh, actually, let me get my level. There, that's the level right there. I'm gonna make it really big. Okay, so you can see the gap up. Here's the open that held. You could long it right off the open, right? And where was the other zone? 55.72.5. Right there. So you can see very clearly that even though they wicked it down and scared the shit out of us, right? It held our algo trend line, which is over here. Here, what's an algo trend line? It's the trend line that they want to hold in the market, and the algos will buy up off of that trend line. Let me just adjust this a little bit. There we go. Make it nice and clean. It's pretty good. All right. So here's the pivot. So if you're thinking, okay, well, what do I do? All right, before the market opens, 10, 15 minutes before, you got the pivots are out. I'm not releasing the pivots before 15 minutes. I'm sorry. I don't want this shit getting out. I don't like it getting out. It bugs the shit out of me. And as the room grows, that's just the way it's going to be. So as soon as the pivots come out, 10, 15 minutes before market open, mark them up. We always do the market prep right before. So just mark it up. It's really simple. All right, so let's just go through this trade. How do we trade levels and pivots? Yeah, 100%. This is a good fucking episode. Okay, so we have our levels. Well, we already know we're opening up above that level. So we know that structure is bullish, right? And how do we know that structure is bullish? You can look at the 1 hour very easily. And what has it done? It's in an uptrend on our algo trend line. The key point in this whole situation is, where do you buy calls if I don't alert them and you just want to trade them? Because, like, look, at the end of the day, I'm not perfect. I do hit a lot of good trades. I hit a couple bad trades here and there. That's fine. But there's guys in here, and a lot of people. Dog Mom's one of them. LK's one of them. OG, Wintergreen, Wiley. Wiley's come into this room recently and has taken the fucking bull by the ball sack and literally been trading phenomenal. So hats off to you, man. And what they're doing is this. And they marked their level. They got the pivot. I give them the pivot. And what do? They try to get the calls, if we're in an uptrend, which we are, as close to the pivot as possible. Because let me ask you this. If I'm looking here and I'm waiting, you have to have your contracts ready to go. You can't be like, oh, well, you know what? Oh, the market's going up. I better get in calls. And then all of a sudden you're here and there's fucking all this bullshit happening. You're late. The best of the best are ready to get in. They're ready to get in. And they're trying to get in right here on this zone. Because you know why? Because this is the motherfucking pivot right there. That's the bottom pivot, and they know this is the algo trend line because everybody in here knows that the fucking algo trend lines and trend lines are the shit. Right? Because if you get in here or here, what's your risk? Your risk is so clearly defined. That's the key. That's the fucking key. The key to any great trade. It doesn't, yeah, it's hard. Friday was not easy. The wicks and the data was insane, right? You can see that here. But the key is this. How well can you define your risk in a trade? And what does that mean? Okay, if I know that 55.62 is a huge pivot, and I just and I know that, why would I wait till 56.80 or 55.80 or 55.75 to get in if I have an opportunity to get in right there? Because if it breaks, you're out for a 10% loss. That's the key. It's not about how much you're going to make. It's about how much can I fucking lose. There's a huge shift in a good trader, an average trader, and a great trader, and a person who loses their ass and then wins and loses and wins and loses and wins. The person who's a great trader and consistent understands one thing, and they care more about how much can I lose versus how much can I win. The people that, when they get that shift of, oh, well, you know what? It's not about how much I win so much, because I know if I'm willing to lose $400 or $500 and I get in here, I know my risk is only at 200 here. But if I get in up here, my risk is like 800 or 500, right? Like, it's getting in at the right spot. Great traders know where to buy and where to sell. Good traders only know when to buy and when to sell. There's a huge difference. Just chew on that for a second. It's a big deal. You want to know where to buy. I'm giving you guys the pivots and the spots, and then also we're doing alerts, right? And if you're new, if you see an alert for $1.50 or 1.50, never take the fucking trade if you can't get that price or better. That's chasing. I don't care if you make 20, 30%. Don't do it. Always try to beat the alert. Be competitive to beating the alert. You beat my fucking alert, you're probably going to be green a lot of the time, more times than not. you know? But if you're sitting there chasing at 1.7, and we're all in at 1.5, but you're sweating. We're not. And if the market, we get stopped out at 1.35 and you're in at 1.7, look at the difference in risk. It's like, you can't do that, man. Right? Because it's not given that we're going to be 100% in every fucking trade. Nobody is. And if they say that, they're full of shit. But the point is how well can you define your risk on the entry. Look, we can hit trades all fucking day long. That's not the point. It's we want to hit winning trades, right? And hit our profit target. So for example, let's talk quickly about profit targets before we finish this up. If my goal and my account's let's say I got a small account and it's $1,000, right? And I want to trade zeros. I don't recommend trading zeros with $1,000, but if that's your jam or you want to do one DTE spies, that's fine too, right? So what's your profit target for $1,000? Is it $500? You trying to make 50% on your port? Your profit needs to be your profit target for the day needs to be relative to how much money you're trading and how big your account size is, right? 10% on your portfolio in one day is amazing. So that means if you're trading $500, half of your fucking port, right? If you are, then a $50 profit is a good trade, right? That's 10. That's what's that? 50. That's 10%. No, it's not. 10% would be $100, but 10% of 500. Yeah. So then you do that twice. Now you hit 10% of your account, but you compound that. Like people that have small accounts need to realize one thing: you can't be expecting to get 200% trades and be making a bunch of money if your account won't even allow you to. It'd be better to put $200 in or wait until IV dumps off. We get late in the day and you can buy 3 contracts for $120 or 2 contracts for $120. Like Friday, we had a sick ending to the day. Friday, we waited. I had this drawn up Friday. This was my drawing for Friday. That was, no, actually, it wasn't that. It was this. That was it. Literally, that was my drawing. We did not take a trade here. We didn't take a trade here. We took a bid trade in here, right there. And those things popped from 0.95. I think Wiley took them actually. They put out from like 0.95 to 300 a contract, and then was it, right? And but we waited. We knew this was going to be a chop zone. Why? Because this is the upper pivot. This is the momentum pivot, right? If you go back to that day, look where we're at here. 56.34. That's the pivot, right? That's the pivot. So they ain't just going to fucking blow through this fucker, right? It just doesn't happen, especially we're trying to break an accumulation range on lowest volume of the year, right? So we just wait for our setup. We wait for our risk to set up. And then what we do is say, okay, we knew it was awesome. Oh yeah. So one thing you guys got to realize, like, I'm not like most of these guys out there who's like a monotone motherfucker who, just like, oh, well, I'm going to take it long here. And I'm not like that. Like when I did a big fucking trade and we're hitting, 500-600%, or I'm looking for 1,000% on a trade and we hit a massive trade, I lose my shit. I'm excited, but I can still hold my own and scale when I need to, look at the candle. I've done this so long. Like I want to let you guys realize, like, look, it's okay to have a fucking blast. You're making money in minutes, in half hour, an hour, more than most people make in working a 9 to 5 for 7-8 hours, or even a fucking year. Like, you know what I mean? So like, that's what it's about. It's like, celebrate your wins and we learn from our losses and then we move the fuck on and do it again. Right? That's the game. So what we did there that day is we waited for the setup and we got in right about here. And our contracts went from 0.60. I think it was 0.60. I had bids in and I was begging for my bids to get filled. Like it was bouncing between 0.85 to 0.90, coming down, trying to fill, but it didn't fill. And then all of a sudden it was 65. I think it was 6. And then all of a sudden it fucking hooked up and they filled us. and it literally just fucking ripped. It went from 0.60 to 6.20 in minutes, less than 10 minutes, and we were out and gone, right? Even if you don't catch top on that, that's still 800%, but that's 1,000% play at the end of the day. So if you have a smaller account, you could have risked $60, $65 for one and made 500. Like for small accounts, like I'm not telling you to hit end of day trades. No, 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 no. I'm definitely not saying that. Okay. I'm not saying that. But I am saying is understand if understand where we're at. Where can you define your risk? In this moment, at that moment, when we were talking and I was putting it in chat, I said, look, I want to fill at the base of the contract of those particular 5640 calls. I want at the base, at the bottom. So I was looking to get filled at the bottom of the range or near bottom of the range of that contract. And luckily we got filled and it ripped and it went our way, right? And I knew it was going to rip because why? Because based on Wyckoff accumulation structure and based on where we were at and the pivot right here, look at this pivot right there. Look at this. This was a pivot, 5604. They held it from 11 a.m. all fucking day. So they ain't gonna fucking break it. Why? Because shorts are trapped, right? And they're holding the range and we're in accumulation. So we just wait and wait until we get in at the bottom and then sell the rip. Yeah, nice, dude. Yeah, that was fun. It was a good time. So, how we trade pivots and levels, you got to be ready, number one, to get in those contracts. How do you know what contracts you get in? Well, if it's in the morning, you have to assess your account size. And I'll tell you two things. Let's say I have a smaller account, right? 5K, 6K, whatever. And I'm looking to get in around 55 or 55.63, that pivot. And yeah, I was. And so if I'm looking to get in here and I know that the 5600s are fucking, $1,300 a contract or whatever they were, 900 a contract, I'll probably be looking at the 5630s. Why? Why is that? Because this is my pivot, 5635. That's the pivot. That's the big fucking pivot, right? You could go 5635s, but I tell you what, the further away from the money you go, you can't hold as long. You just can't. You get the fucking move and get the hell out. You make 30%, get the hell out. But if you have 5600s and you have a larger account, you have the space and the deltas working for you to hold longer, right? Obviously you want to sell the rip, but you can let it move, because as we hold this level, right, you're not really getting cooked. You're really just not. You're fine. You can sell the top of the range, and you're like, oh well, they're not breaking it. All right, let me just get the hell out, right? So you could sell those runners at the top or at the mid range, because at the end of the day, you're like, well, they could break us out of the range because we are in that SOS BULPS breakout setup, but they're not, and my shit's already starting to decay, so maybe I get out, right? But if you're in 5650s and they fucking juice it, you gotta get the hell out. Like you just can't sit there and hold for this massive move. And the problem is we've been treated very nicely with massive moves, right? It doesn't mean they're going to continue. And you have to realize that, because if you don't and you start holding for these massive moves and they don't get them, you're fucked. Like you're going to be toast. Good buddy of mine, he had the 5650s, got in, was up, and he didn't fucking sell. The problem is this. I told him, I said, listen, man, I'm going to tell you this one last time. When you're playing calls with the VIX elevated, and you're going that far out of the money, you better fucking sell or better get ready to stop out. Because why is that? Anybody know why? When you go out of the money with calls and the VIX elevated versus I'm totally down for going out of the money in puts, right? Out of the money in puts is perfectly fine, right? But going out of the money in calls with the VIX above 19 or above 20, why is that? Why do we not want to go so far out of the money unless we go 1DT? Yeah, it's that. It is that. But most importantly is this. Yeah, there you go. PSK or PSYK. Yeah. So like when there's two reasons. Okay. Number one is the underlying, right? So what about the underlying price is not favorable for a move, right? Number one is 90% of the time in an uptrend, it's low volume. I mean, it's like almost all the fucking time, it's low volume. And when that happens, you're fighting charm and theta, that time decay in out of the money. Every little flick up, you juice, and then every little flick down, you drop even more. And why is that? Just because of what PSYK said. Because the IV on call options in this space with the VIX that high is probably like 45 to 50%, right? Like on a low VIX in a neutral market, IV's like 15%. When your IV on your contracts are, 40% plus and they're low volume pumping us up into this, or you got to get the fuck out and you got to sell that strength, or you buy what? Closer to the money, like closer, like really expensive shit, or you buy time, right? You cannot expect the return on your money in a high VIX environment when you're playing upside. You just can't, unless one thing happens. There's a gamma squeeze, or the speed of the move is so fucking fast the IV doesn't have time to drop. The VIX can drop, but the IV and the calls might not drop as fast because of the price speed. That happens rarely, right? So that's really important to understand. You have to understand how your money is moving when you put your bet down. It's just, that you just got to know. And if you're new to this, then you need to size down and buy time and start paying attention to this stuff, because this is your fucking money. And long story short, in an elevated VIX above 19, we want to buy closer to the money or buy time and be safer. We want to take our profits earlier, as opposed to if we're in an elevated VIX and we are expecting a down move and we're playing for downside, we can take out of the money further, because when the market moves down in our direction, the VIX will pop and the IV on our contracts will pop, which holds the value of the contracts and juices it even more. But then the same thing applies. You don't want to hold for hope. You get a big extension up here. Here's an oh shit. Ooh, let me get that. You get a big extension here. So let's say you get calls here, right? Let's say you get calls here at this pivot, 55.75. RS is in calls and it's fucking ripping. And then all of a sudden it hits this pivot and blows through it. He's out. You should be out of this fucking thing. He's out because why? Here's the 13 too. It's in his profit zone and the price is getting extended away, right? So what's happening in this moment? Well, you have retail here chasing fucking calls right there, right? Pros are in here. We're selling here. Retail's chasing here. And then what happens? They push it a little higher and bait them with 10% profit and then fucking revert it back. Boom. See ya. Stop them out. Take a loss. Thank you. Come again. Learn how to trade. Literally how this shit works. So statistically, it's in your advantage to get in off the fucking pivot or off of a key level or support, right? Same thing goes for this one. Here's the key pivot, right up in here. If you're in futures, I think LK might have taken this one. It was pre-market, and then they drove it up. You get puts up in here, you get puts even here, or you get puts right here off the break of a pivot. How can you play puts on downside? Well, maybe I missed it here, and maybe I missed it here. Okay, well, what am I looking for? I'm looking for a break of this pivot, 55.73, whatever it was, right? 55.74, this line right there. Once it breaks that pivot right here, boom, this candle goes up and cannot close above it. What do? You get the fucking puts, risking a 5-minute close above that pivot. You see? That's exactly what you do. And then what happens? You're in the trade and you're sized in light to start because that's how you should do it. And all of a sudden you get the move. And then you get the move and you're watching this 15 and you say, wow, man, here's the 15 right here. There. Oh, and then you push down, get the fuck out. Why? Why would I get the fuck out? Right here. Here's the EMA. You got a nice extension away into another key pivot, 55.30. Sell that shit. That's a 200-300% move right there. Get the fuck out. Don't be greedy. Oh, well, I want 5,500. I want 55. Yeah, okay. Your greed will be the downfall of your account. I tell you, I see this all the time. It's kind of comical because I see certain traders, even good ones, they see a setup, right? They see this distribution setup and they're like, oh, we're going to 4,600 or 4,650. Like, dude, motherfucker, you just dropped 70 points or, 40 points and you're not happy? Oh, I made 200%, but I'm looking for, like, come on. It doesn't work like that. The market does not work like that. Look at that. They drove it right down to my fucking pivot. And then what they do? 15, 30, 45, an hour. It was an hour and 15 minutes of stagnation and fucking everyone who tries to chase the fucking hole. And then by the time they fucked everybody, then they gave the little move. And you know what? What's even funnier is this. In this zone, the contracts, you buy this break of that pivot and you play here, those make probably 250%. And if you waited until this break, these contracts, no fucking way. You don't even make 250% because the decay in time was too much. It's just the way the game works. And you're better off to waiting until the flush and then get everyone, the whole boat chasing the hole, and you play the opposite way. Like RS called this bottom. RS called that fucking bottom. That was an awesome fucking call. Really good, really good, really good call. Right? So it doesn't have to be rocket science. You just have to put the fucking work in and have the patience and discipline. It's one thing to be like motivated to trade. It's a whole nother thing to be disciplined. Like fuck motivation. Seriously. Like discipline wins every day of the week. Am I disciplined enough to get up on time, do my morning routine, get things done, mark my levels, understand where I want to buy my calls or my puts? Am I disciplined enough to not chase? Chasing is a negative emotion. It's a negative action, actually. It's fear, right? Fear of missing out, right? You want to create positive energy, then just sit and wait. Patience is the virtue of great traders. So this week is going to test your patience. I mean, this is this is the toughest week to trade. FOMC week and OPEX. So now let's talk a little bit about some other shit. So Oh yeah. So for those that are new, I do want to give you a reminder. Um, I have my son this week, so it doesn't. Yeah, I'll be giving alerts for sure, and we'll be taking trades. But I do have my son, and uh, he usually wakes up around market open, so everything will be out, pivots, yada yada yada, all that good stuff. But it's very fluid on the weeks I have my son. So typically when I don't have my son, I always stream first 3 hours of the market, and sometimes I stream all fucking day. And or sorry, I'm streaming all day regardless, but live calling, live EDU, all that stuff on the weeks I don't. So it's all day. But when I have my son, this is how the schedule goes. It's a little chaotic for me off the open if he's not sleeping still. He's 18 months, so he just learned how to walk a couple weeks ago. So he you'll hear him on voice talking or babbling, and so he wakes up. I got to feed him, and then usually change him. And then after I change him, he kind of bebops around and hangs out. And as we're all trading, so you'll hear him there and there, and I'll be on live after I get all that stuff done. And then he goes down for a nap, usually 2 to 3 hours ish, depending on the routine he stays in after open. And then when he goes down, he sleeps for like 2 hours, and I'll stream the whole time, or sorry, live trade the whole time if there's a great setup. So this week, he'll most likely. I'm gonna try to time his nap. I'm gonna try to get him on schedule. Actually, it doesn't really matter. It's fine because I'll be streaming all day throughout the FOMC day. Uh, because if there's a really good trade or something crazy happen, I want everybody to have a chance to get into it. Um, so that's how it goes. So we just gotta be a little patient. We have other pros in here that are fantastic. They're giving alerts, not always in Pro Trade Zone. Florida Hokies doing a great job of that. Yeah. All right. Have a good night, brother. Appreciate you. Bring your A game this week. All right. Um, so uh Hawk Holdings post swings, not that active as much. Um, and then Joe Schematic does his stuff, but really Florida Hokies been on fire. And Sir Wyckoff is Volmageddon in the chat. Vince, he's great. He'll drop in some dimes, and and so, and then we have OB who will hop on, do his thing, and then GS Corner. That's a channel, a good friend of mine and friend of a bunch of us in here. Gull Rays. He has really good setups. Take a peek at his stuff in the morning as well. But and then we have Raz, who's running the 1,000 to 500 or $5,000 challenge. Yeah, yeah, he has. He's been fucking crushing. And the reason why I brought him in is because he trades very similar to how I trade mid caps. So he trades shares and he trades call options. So he'll post his trades as well. Um, and then let me think what else here. And then that's kind of the overview of the market. We do gamma, we do obviously flow. I'm not a huge flow guy. I don't trade solely on flow. Actually, I do the opposite. I pay attention to it. I look at it. If you want me to pull flow on something, let me know. If you want me to pull gamma, it's not a problem. Just let me know. I use flows for specific reasons, and then sometimes we will take a trade based on flow if I see things that set up properly. But I sure as hell don't fucking take trades all on flow. So you ain't gonna get that in here unless you want me to post specific ticker flow for you. It's not a problem. So I wanted to talk about uh, a couple tickers. All right. I like energy. I like XOM a lot. It did drop down, so they could do this actually. Could see this because they already popped it up. I'd like to see something like this now, I would say, on XOM. So XOM, I'm bullish. I would like to get some June calls for the room, even like mid-April. So like short term and June on XOM. It's in a really, really nice pattern. This thing's getting accumulated down here in my zone. Energy looks great. I expect it to go up without a doubt. You can look at the RSI on the daily. It's just ridiculous. Yeah, MU. Let me take a look at MU. Yeah, I jumped on his spaces for a second. Yeah, so I'm not a huge earnings guy. We do earning lottos in here every once in a while. So they're after hours here. Yeah, this isn't a great setup. This is the kind of setup where if I'm going to take this through earnings, Wiley, I'd like to take like June, like 140 calls. You know what I mean? Because you can sidestep IV crush, and if the move happens, you can sit in it, right? The June chain for MU is beautiful. Yeah. So we'll see what they do for it and see what flow sets up. I like UNH a lot. This thing just broke out of a, so this is an accumulation. We played this in April calls. We played it from the break of, 477, and we traded them 115% all the way up here. And now we're trying to build position in for this move. This chain for this week, yeah, I'm in those too. I'm still in them. It'll be interesting how this sets up because let's take a quick little peek here. So this is a clear as day flag that just broke. Right? Back test broke, hold. Now this next move, I'm looking at 510, right, for the first target on the move up. I want it to break previous high at almost 500 and rip. This chain this week is out of the money bullish. We all know that, right? So they have a gap up here, 515. There's a lot of money sitting on the 530 calls for April. So the EMAs on the 4 hour really bullish, curling up. The accumulation schematic is fucking beautiful. It's all playing perfectly to plan. So ideally, I'd like to see 510 hit this week. They could go even higher too, right? So somebody's expecting a big move out of this, or a lot of people are based on the chain because they're stacked all the way to the 530 calls for this week. That doesn't mean buy the 530s. So they could gap up to 500 and rip all fucking week. That would be cool. I'm down with that. So another one that I like was one that I think Florida Hokie brought up. Yeah, this is a compressed healthcare. Excuse me, healthcare stock that's compressed up, about to break the range. So if it breaks this range, this thing's gonna fucking scream up to 73 to 75. These are nice low IV contracts. I love these kind of setups. All right, next one is ASTS. It's another one we're in. Okay, this thing's set up beautifully. This thing turns red at all on Monday, it's a buy. You buy a little extra time and you sit on it. Alert there. All right, and then talked about that. Yeah, that's a solid one. This is actually a decent equity play too. All right, Oklo, interesting setup here. Very similar to ASTS. Look, only difference is this is a ride in the pine and it broke. In this one, Oklo, falling wedge just broke. And what I really like is you can see here, let me zoom in for y'all. You can see here, all right, so this was the low set. right? It goes up and it back tests this level. And then what does it do? Comes right back down and confirms support off 24, right? So now what I want to see, what I would like to see is this. Watch. Up, down, up, down, up. W pattern breakout. That's what I would like to see. So you guys see how you can forecast setups and how they break, right? That would be a beautiful setup. So I'm going to take an alert and look for this thing to retest 26 roughly. See a quick flush in the morning. A lot of these stocks like to do this right off the open. Boom, and then fucking do this. Right? So Monday, this will be a top watch. Tomorrow, let me just make a note. I like this. These are cheap contracts. And snow too. And then Amazonian. And will be BTC shit. All right, so keep an eye on that stuff. Oh yeah. I'm sorry. So that's what I would like to see. A quick flush, and then we hop in and we take it for a ride. Ideally, based on this pattern, you guys can quote me on this. If this flushes down under this level, right around 26, 25, and it holds 24.88, if it holds 24.88, you better fucking believe this thing will hit $30 this week. Quote me on that. Okay. So before I started doing SPX, I used to be a swing trader. And FCX is actually, in a good setup too. So I used to love to find stocks that were about to fucking rip hard. Meaning I was always looking to buy a month out calls or puts and try to catch a 10, I'd say like $7 to $10 move on those. Check one more thing. I gotta check bios too, because this thing's is a sneaky stock too. All right, so this is also in a W pattern that's already broken, and this has got a nice setup on structure. It's really nice, actually. I think this thing can see 40 plus and possibly even up to the 200 at 42. Why does anybody know why I like this setup? You can hop on voice and chat too. I don't bite. All right. Look at the daily volume. This is increasing buy volume, decreasing sellers, right? And it's still in the range, guys. This thing looks sexy. So what I like too is the downtrends broke here on the daily. And let me take you over here and look at my little friend, the RSI. So for those that are new here, I teach about RSI dynamics and the effect and how to play them. And you might be like, I know what the fucking RSI is. Yeah, okay. Well, knowing these types of little things will help you understand when a breakout's coming. Okay. There's a lot of different ways you can trade, not only based on structure, but also tying it into the RSI and also understanding volume analysis and how the RSI is going to move can help you predict price movement in the future. Right? I already know, it's not rocket science to understand that this level right here, this is called 4207, is going to be the first target if you get in calls. So you catch FCX on weeklies or 2 weeks out, probably this week, because sometimes, when we have defensive movement, which means like oil, XLE, metals, right? XME, and those setups are bullish. these things can rip and pay so well. So maybe we grab some April $40 calls and look for those to go in the money by Friday, right? So I'll be watching this one as well. And why I think this is going to break out is because this RSI right here is in a W pattern that's tilted. So it could come in on the daily, give us a little red day, and then I'd look for it to go like this and fucking break, retest, and break. That's what I'm looking for. Like, just a little quick EDU on the RSI. The RSI is, if you look, let me think about it this way. Okay, here's a perfect example, right? All right, so we all know what an inverse head and shoulders is. An IHS pattern is this. Let me do this. It'll be easy. Okay, so I'm gonna do this for everybody, the people that are new too. Okay, so if I'm looking, so what is a strong movement, right? A strong movement in price is what? It's this, right? It's shoots up, comes down, shoots up, comes down, shoots up, and goes like that. That's a strong movement. That's a breakout pattern. You need to understand this, right? Price never does this. Just doesn't. It's not how it works, right? And you might think, oh, well, he's full of shit. Nope, I'm not. Check this out. This is an accumulation schematic. Look at that. A breakout. Up, down, comes down, tests it. Does that. That's what it does. This is what price does. And when stocks are getting accumulated. Now let's look at the opposite. Okay. Let's move that over here. Whoops. That. This is a weak stock, a stock that's about to fail. And this happens intraday too. Up, down, up, down, up, down. That's a breakdown, right? That's a weak fake breakout. This is really important to understand. It's very basic, right? And let's take a look at a distribution schematic quickly. You can see that. Shoots up, comes down, fails, and drills. Shoots up, comes down, fails, chops, and then fucking drills and fades. This is distribution, okay? Really important to understand these simple concepts. Obviously, the alerts and all that stuff, but understanding what you're doing in the market is really important. Okay, so this is a weak fake breakout, and this is a strong breakout. Okay, just having these in your mind is simple and effective. All right, so when we look at an RSI, okay, an inverse head and shoulders is this. It goes like this, right? We all know this is called an IHS. But why is it important on an RSI? Because it's forecasting a movement that's about to happen, right? And when you have that, you have a left shoulder there, a head here, and a right shoulder here. And here's your neckline. So when you see this dynamic setting up and price is literally doing this, you can speculate based on volume and price structure on a shorter time frame that it's going to break out based on this setup. I've taken hundreds of trades based on this setup. And I know my win percentage is well over 80% on swings doing this. It is fucking awesome. Conversely, we know that if I see this on the 15-minute on SPX or 5-minute, what is that? That's a distribution setup. And what most likely is going to happen is this. Boom, boom. That's what's going to happen. Watch this. I'll go find it. I know I can find it. All right, let me pull up US 500. Oh, look, it just fucking happened. Ah, look, it actually happened in the hourly. Look at that. Look, 1, 2, 3, drill. And look at that. That's set up Friday. 1, 2, 3. You guys see this? That's hilarious. Where's that? Yeah, it's right. Let me pull this down. That's distribution, right? It popped up, it shoots up, overextends away from the signal line, pop, and then it fucking drills. And this is going to probably go down further. Like, look, it pops up, and there we go. And now it probably will break and come down and probably look to retest some of these lower levels and then reaccumulate and then back up, right? So let's take a look at the 15-minute. I know this happens all the time on the 15 as I check it out. Okay, here we go. Look at this. Look at all these little distribution setups right here. Distributes, drops down, pops up, and then fucking drills. And then look at this dynamic that's set up. Like here, let me get this all organized here. Drop the volume down. Okay, so oh shit. I think my son's talking to himself in his sleep. All right, so this is what I'm talking about right here. You see this right here? Just chop, chop. It drops, pops up. You got to be looking ready to short this because this whole setup right here is distributing and the RSI is communicating it. And you can see it's right there at a key pivot. So, and that's what it did. It did. It pops up, chops, 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 and then fucking drills. What was even cooler is this. As we go into the pivot right here, right, or even into this level of support, so this is a level of support and this is, look what sets up on the RSI. Left shoulder, right shoulder, left shoulder, rip, right? And then you get bullish divergence, right? And then the fucking thing goes crazy. What is bullish divergence? Everybody know what that is? Throw a 2 in the chat if you don't. It's okay if you don't. Does everybody know what bullish divergence is? I'll go over it really quick. It's when price makes, here, let's go to the chart. So we'll look at the price in the chart down here. When price makes a new low here and the RSI makes a higher low. So previously the RSI here is really extended down, but price is right here. You can see this, right? You understand that? Very simple. So RSI bottomed out at 24. Price bottomed out at 55.50. Then price goes up and then it comes down and makes a new low by, 25 points. But the RSI did not. The RSI made a higher low. That is it's not suggesting, it's telling you that the likelihood of a snapback aggressive move is coming really soon. And it's important to understand those simple concepts because you want to be able to apply this. And if you're like, oh my God, this is a lot of shit, holy fuck, don't worry about it. It's overwhelming in the beginning and it will be overwhelming in the start. But, as you go through the alerts and through the room, you make some money, you learn, you build confidence, and you listen to some of the EDUs, you're going to understand. And then you'll have more confidence and then you'll be able to see things a lot better. Right. So that's, RSI is a very special thing that not a lot of people pay attention to. I love it because it can lead to massive breakouts in that's how you get in cheap. Let's take a look at Google quick. I think this is the one that I was looking at here. No, I think it was Amazon. Let me check Amazon. Yeah, it's Amazon. Dude, is Nismo here? Yeah, Nismo. Dude, look at this RSI. What do you think about this setup? How dirty. Look at this, guys. This RSI is fucking pinned in this box right there. And you know what it made? It made an inverse head and shoulders. A little wonky, but there's the left shoulder, there's the head, there's the right shoulder, and it's breaking. It's starting to break. But what happened? Price has not fucking moved at all. So the RSI is signaling upside, and the price has not moved. Now, if you look at the volume, buy, little sell, buy, and the price has not fucking moved. So what's happening down here is negative gamma is getting flushed out. Buyers are stepping in, call speculation's increasing. That's why this is one of the top watches, because we could see a quick $5 to $10 move this week on Amazon, right? Because of this setup, right? The setup is teed up. And I bet you, I would bet my fucking ass this happens. I bet you this RSI gets fucking stuffed right here. I bet you it shoots up, overextends, and then it fucking comes back in and retests, and then it shoots up and goes like that. Why would I think that? I'll tell you why. That's supply on the RSI. And this is support. You ever think about that stuff? Look at that. Support, supply. Let's just go retest it. Sell it there. Thank you. Peace out. Give us a little red day on Amazon tomorrow and we'll take that shit long and make some free money. It's these little things like this that allow you to like just snipe 40, 50%. Get in, make my money, chill. You know? Like that's what it's about, right? You get an extension over here. You know the RSI on the daily is going to get a little overextended. They're going to fuck chasers, but we know it's set up. We're ready for this tomorrow. Like these are setups that we're like licking our chops for. We're not interested in, setups that are already gone. Like for example, Microsoft. Yeah, sure, it might be a top watch for a lot of people. But you know what I see? I see something that's ready to cool off a little bit. I see something that just broke the range on the hourly right here. And I see something that could, chop in, hold the markets and chop back in and come back and retest this previous break of 385. Right? 2.5% day on Friday, great day. But why would I be chasing something up here? Oh, no, the settings are RASI. Yeah, they're RASI. No, yeah, they're default, I think. Let me check. Oh yeah, the most important thing, yeah, these are how my settings are. I'll set them up here. Let me do this. Oh, I have my RSI set up. The most important part is this on the RSI. Always wait. You need the say the wait for the time frame to close. That's the key. That's the fucking key. The time frame has to close. You have to have that box checked. That's the motherfucker right there. That is the goat of all things within the RSI, because that allows you to see when that candle closes on that time frame of that RSI that you're looking at, and that RSI locks in that mode, then you know how things can move. Like it fits perfect. So like for me, like looking at this, Microsoft, if it gaps up, it's probably a sell. Like it's probably going to sell based on where the RSI is on the hourly, based on how it has not back tested support here. So that's not of interest, right? So then this is why we look at these types of things. Same thing with snow. Like, it's a good setup, but I want to see it come in I want to see it dip underneath, right? Look at this setup here. Look at this. Left shoulder, head, right shoulder. Look what the fuck happened here. It fucking drilled and ripped. Look at that. That's beautiful. And it's you don't even have to do anything. Just look at the damn RSI. Oh shit, the RSI extend. And here's another thing. You have a signal line here that's yellow. How often do you think the RSI, the blue, stays away from the signal line? That's things to pay attention to. We talk about reversions and tingleberries, right? Look at that. It's the same shit. And it clues you in because RSI is closing here. It's closing here, closing here. And then all of a sudden, boom, drills. Look at that. 1 hour, 2 hours, 3 hours, 4 hours, fucking bear flag drill. All set up based on looking at the fucking RSI. Literally. Right? Yeah, sure, it's at a level. But really, this gave you the fucking clue. The reversion is going to happen. And then if bear flags, and you're like, well, I might as well just hold because it's set up and then it drills right out the open, right? So, yeah, definitely one of the most underrated things to ever use, to actually use dynamically. It's a dynamic indicator. Why is it dynamic? Because a dynamic move is something like this, right? A non-dynamic or stagnant move is like this, right? Nobody gives a shit about that. We want dynamics. Dynamics equal and opposite reactions. Big move away, big move back in, right? This is how we trade in here. So let's take a look at NVIDIA 1 hour. Yeah, this thing's cooked. Like if this thing gaps up Monday, it's probably going to be an auto short. Everybody's gonna be like, oh my God, oh my God, oh my God, NVIDIA, fucking, oh my God. So this thing, what I would look for is this RSI to do this. Overextend, overextend, and then look to short it up here. And the signal line's fucking back here. And then we'll fucking take this fucker down. Right? And that would line up with, gap, chop, pop, and then short it off 29-ish, and then take her back down. So this is just a little bit EDU tonight. It was about 2 hours. And then a couple of the stocks that we're looking at, the broader market thesis, what we're looking at for this week. Anybody have any questions? We covered a lot of stuff. It's about being patient this week, picking our targets. It's not about taking a bunch of fucking trades. It's about, making sure we protect our capital. Yeah, I'll take a look at INTC for you. Whoa. Yeah, that's right. They had a huge gap up. What's interesting about INTC is on that news, you have inside bar on the daily, definitely supportive volume on that CEO news, the new CEO news. I mean, I do like the risk to reward. Here, let's take a look at the RSI. So like for me, when I what I look for in a really like I would much rather like buy when I have multiple layers of confluence that's set up. When I have a red flag, like personally for me, the RSI being up here, it's neutral. So it could go anyway. It could keep going, but based on the gap below an inside bar, you're in 22s. Okay. Oh shit. So you're deep in the money. Let me think here. You needed to hold 23. So you have a couple options. Either A, it dips and rips, right? And then I'd be looking to sell or looking at 20 this previous zone here. I'd be labeling this previous zone as my target to sell into. What's interesting is the price is compressing up into the 200. Let's break this fucker down for you. Like, let's break it all down. Are you ready? All right, this is how I look at this thing. One there. All right. And then I'm looking at this spot as a big fucking spot too. And PSY. That spot. So this candle right here is key. Okay, so I'm not really worried about the downside range. I really could care less because you're already in the trade. So the only thing that really matters is what's going to happen tomorrow or the possibility. So I'm going to look at the week. I'm going to look at the daily. Then I'm going to take a peek at the weekly. All right. Weekly looks great. What I like about the weekly is it's in an uptrend, right? This RSI is in an uptrend, right? The RSI is starting to break from the signal line, which is a good sign on the weekly. The only thing that's a little alarming right now to me is the daily and how it's a little extended out. It could come in, I'll say tomorrow, and I would want it to come in and then take a big move up and extend. If the RSI extends out, I'd be selling that rip, which it kind of would look like this. Probably a retest of this 23 level in the morning, get bought up, hold, and then look for a 1 or 2 day break out after this double inside bar, right? And then look for it to break into 2654. Look to sell, say, 80% of my trade here, and then let my runners run with my stops in right fucking there at the 200 at 25. That's how I trade this thing. And then I'd have my stop loss right underneath this doji. It breaks under that doji at 23. This is called 2313. If it closes the daily under 2313, I'd be looking to get the fuck out and take that L. Let's take a look at the shorter term time frames. So we take a look at the weekly, the daily. Let's take a look at the 4 hour. 4 hour looks good, really good. The RSI's come in a little bit, which I like. I like how it's coming in. I like how the RSI is brought in, but I also like how the 4 hour is flagged out. Tells me that it's most likely in a late phase of accumulation, getting ready to do this, right? That's what I'm looking at the 4 hour. Now let's take a look at the 1 hour. Okay, 1 hour, it's fine. Looks good too. You just want to see this thing hold structure and like consolidate and get ready for the next move up. It's good. Yeah. So I'd be looking for the downtrend of the RSI to get broke on the 1 hour for it to go up, retest, and fucking rip. And then once this thing starts to get overextended on the hourly, I'd be looking to get the fuck out. Like those are my signals right there. 15-minute, and it really doesn't fucking matter. But yeah, I'd be trading the 1, the 4, and the daily on this. It's pretty good setup.
Sweet. Thank you, Sales. I appreciate that. I got my risk and my sell targets written down. I appreciate you.
Perfect. Yeah, no problem, bro.
Appreciate you.
Yeah, you see what I'm seeing now?
Yes, I totally see what you're seeing. It makes sense.
Cool.
But
Awesome.
I saw the bear flag. I held it on Friday. I was like, man, this thing's flagging it. I feel good about this.
Yeah.
On the hour and the 4 hour, it just looks so solid.
Yeah, what I'll do is I'll set an alert at 2313 and we'll jump in calls with you if it hits it.
Okay, I love it. Thank you. That sounds rad.
Yeah, these are nice because they're low IV too. But I really don't like trading the stock that much because it's a fucking dinosaur. But lately it hasn't been. It's just gone fucking crazy up and down. And if this thing does break the range, like this thing could see $30. Look at that. This is yet to be tested. So maybe April $30 calls might not be a bad little play here.
Okay. Sweet. I love it.
So
Thank you, Sales. Appreciate you, buddy.
yeah, no problem. Let's take a look at the weekly quick here. Ooh. Utah, accumulation, redistribution, up, drills. Yeah, they have to break the range and hold it. Yeah. Pretty solid though. It's a decent setup, man. All right, guys. Anybody have any questions on QQQ? That dip after the rip on open, the 5-minute RSI double bottomed would add conviction to buy calls if you were playing the dip. Well, if you were playing the dip for you. Okay, let me take a look at Qs. All right, so Razzy's looking at the 5 off the open rip. All right, here's the open. Throw the vertical line up. All right, this is the open right here. That big purple line. I'll make it solid. All right, that's so much easier. All right, so and he's looking at the 5-minute RSI. All right, so looking, and his question was the dip after the rip on open. Yeah, I mean, you have to. Yeah, you have to take that. Yep, absolutely, 100%. He said we're talking about this RSI. So here's the rip, right? Rips up. What does it do? Overextends, comes back down, and then, and more importantly, Razzie, what you really want to be watching is this off that double bottom, right? You get your wrist set here from this particular supply zone, right? Or sorry, demand, right? Bottom of the demand, right? And what you want to watch in the RSI is this double, but it's a W. That's a powerful break, right? It's a W. And once it breaks the top, it's going to shoot, right? So that's a layup right there. So when you guys are like, one thing I want to say too is when you're trading and you're learning, the most important thing is in the moment of the trade. What are you thinking about? In the moment, right? Like nothing matters like now, tomorrow, pre-market, like that doesn't fucking matter. The only thing that really truly matters is how you talk to yourself in the moment. Are you saying to yourself like this? Okay, RSI is overextended. I'm not going to chase this. I'm going to wait till it comes back in. Okay, price is right up here. All right, now I'm thinking, okay, RSI needs to come back in on the 5. All right, where would I be wanting to buy? Okay, here's a good support level right here. Right, this would be support. I'm looking to the left, right? Looking at this, that's a good support level. I'd be looking to really buy there. And then I'd probably add another layer of size if they dropped it to the bottom line. So I throw 1/3 size in here, and then I see, okay, all right. Now I'm talking to myself and saying, okay, RSI is coming back in. It's overextending the downside. Okay, it's setting up. All right, it's just double bottom. Okay, I just got filled off my level. All right, I'm holding. Wick, break. I'm out. Right? There's your 50% play, and you're done. That's how you got to think through the trade. You have to think, okay, I add one contract down here off the level, or maybe I'm a little late. Okay, well, is price breaking my level? No, it's holding the demand zone over here. It's previous resistance turned into support. Okay, this is a key spot right off the open they held. I'm going to start laying it in. I got one here. Okay, they dropped it down. I'm going to add 2, 3 more 5 calls, whatever. All right, ripped, perfect. I'm up. All right, I'm out 50%. I'll leave a couple runners go. Like that's how you got to talk to yourself. You have to think in the moment like this. So when I'm sitting there on voice and I'm talking through trades for you guys, you want to be thinking that way, right? You have to, because it's about how you talk to yourself that gives you the certainty within the trade to hold it. You know what I'm saying? It's like you have to have the certainty behind the trade to hold it. If you don't have the certainty, you have nothing. You're just like guessing. But there's certainty within facts, right? It's a puzzle. I used to talk about this all the time. You're putting a puzzle together. What is the puzzle? Well, in this particular trade, you waited for it to come back in. You identified the support level. You identified where you're going to buy. You know that there's buying here because of this move and because of this wick. You got a double bottom on the RSI. Those are facts. This is not just a guess. This is an actionable trade that you can take with defined risk. What's your risk? Well, I already know what my risk is. It's right here. That's my risk. Oh, I just got in. Perfect. All right. My risk is good. I only got 50 cents of risk here. 60 cents, whatever. Buy one DTE. I'm chilling. You know what I'm saying? That's the name of the game. Right? So anybody have any other questions? Otherwise, I'm going to wrap it up there. Let's see where the market is. Yeah, this thing looks like it could come back in a little bit tonight, but it'll be interesting because we have the London switch in 4 hours, or no, 5 hours. They could drop it down and then reaccumulate and start bringing it back up into the range. This will be interesting to see what they do. I wouldn't be looking to take a trade tonight, to be honest with you. Nobody has any questions? All right, we're going to wrap this up. Yeah, to me, it just looks like we're ready to kind of come down a little overnight. This is a bear flag. Looks like a redistribution up here. It looks like my shit's gonna get invalidated, which is fine. I'll just delete it. No big deal. But yeah, if this trend line snaps tonight and we're sitting literally sitting on my pivot, that breaks. This thing's gonna probably come back down, test this bottom range. Yeah. Have a good night, guys. Take it easy. And rest up. We're gonna have a great week, all right? All right. Peace.